Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and try to help you to navigate the tax system as it applies to you. So today I'm going to talk about trading allowances. Before I do, if you're new here, then please do take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to navigate to our other information that we have available on a whole host of different topics, all aimed at supporting you in your self-employment. If you navigate to the playlist section of our YouTube channel, then you will find the topics loosely categorized to try to help you to find the information that's most relevant to you. So back then to trading allowances. So we've had a lot of questions about these. So I just wanted to give an overview of what trading allowances are, how they work, and answering some of the most common questions that we've had. So trading allowances are either for self-employment or for property income. And the idea is that if you are self-employed as a sole trader, then you can use the trading allowance if you have income. Now, when we say income, we're talking about the turnover, the sales, the actual money that you're receiving from your customers, not the profit. So the money you're receiving, if that is under £1,000, then you can apply the trading allowance and you are exempt from needing to even declare that income to HMRC. So if you don't have to do a self-assessment tax return for any other reason, then and you simply just have this income under £1,000, then you don't need to tell HMRC in that instance that you've applied the trading allowance. You just would be exempt from needing to report that. Now, if your income is over £1,000, the trading allowance can still be used instead of assessing and calculating your individual expenditure. You can apply the £1,000 trading allowance. So this may be useful, obviously, if you have expenses less than £1,000. That's obviously clear that that would be more efficient. If it may be that your expenses are over £1,000, but it's very onerous to calculate them. So again, it may be for convenience that that you use this. And when you actually come to complete your self-assessment tax return, so you would put your income in as normal. This is when your income is over £1,000, remember. And there is a box that you could put your trading allowance in. So you wouldn't put it as an expense, you would put it in the separate box. But then remember, you can't claim any expenses then. So you literally would have your income less the £1,000. And that would be your taxable profit from your self-employment. So just to recap, if your sales, your turnover, your income is under £1,000, then you don't need to declare that on your self-assessment tax return. You would just tick no to being having self-employed income. If your income is over £1,000, then you would complete that section. But if you wish to, you can use the trading allowance instead of expenses. So just use that as an allowance. One thing to mention, if you are relying on the trading allowance for income under £1,000, you don't, as I mentioned, you don't need to declare that to HMRC. You don't need to notify them at all. But what you should do is keep your records so that you can demonstrate that your income is under £1,000. So if ever, for any reason, it was questioned, and then your answer, your justification is I didn't need to. I relied on the trading allowance. My income was under £1,000. Then you would need to have potentially the records just to demonstrate, look, this is my income. I totaled it up and it clearly came to under £1,000. Now, obviously, just to mention that £1,000 is the trading allowance at the current time. So we're in the 24-25 tax year at the time of recording this. So if you're watching this historically or in the future at some point, then obviously you just need to double check that the trading allowance is still the same amount. I will in the description pop the link to gov.uk so you can read the full information if you should need to. So as I mentioned, or I'm talking about self-employed. So this is not something, if you're trading in a different way, a limited company, for example, it's not something that's relevant to you, but it does apply to trading income, i.e. self-employment, and also property income. Now, the next question that we've been asked a lot is, what if I have two businesses as a sole trader? So we've talked in other videos about how this works and how really you can separate the businesses. And obviously from a business management point of view, you would want to have separate accounts if you have separate businesses. But ultimately on your tax return, the total would come together to be your income from self-employment. And the reason that I'm explaining that is because as you think along those lines and if you've got two separate businesses, they're going to be combined for your income from self-employment, then it becomes clearer that you can only use the trading allowance once. So for example, if you had two businesses, two completely separate businesses, it's completely irrelevant if the businesses are linked or not. It's the only relevance is that you're operating as a sole trader in each of them, and you had income, say £800 from each of them. So although they are under £1,000 in each business, once you add those together, your income from self-employment, your income from trading is over the £1,000. So therefore you wouldn't be able to rely on the trading allowance. You would then need to declare that income because it is over the £1,000 from self-employment. And on a similar theme of that with the questions, if you have the two businesses, you can only apply the trading allowance once, and it's trading allowance or expenses. So you can't apply the trading allowance to one business and claim expenses against the other. When it comes to the trading allowance, it's not relevant whether that total income from self-employment is coming from separate businesses or one. It's relevant from self-employment. So in the scenario that you have say two or more businesses that you're operating as a sole trader, if you and that the total income from all of those is £1,000, then it's if you applied the trading allowance against one of your businesses, then you can't claim anything in the other. So it would be the total from self-employment would be allowed one trading allowance or expenses, and you can't chop and change that between the businesses. As when we come to trading allowances, we're talking about the total from your self-employment, from your trading, and it's not relevant if that's split into different businesses. So hopefully this is clear. Just one final thing to mention on that is that although if you have separate businesses, we're talking about the total from self-employment. If you have income from property income and from self-employment, then those two trading allowances are separate. So it's just important, just as I say, just to stop and think, which allowances am I reliant on? Okay, well, the property income and the trading and the self-employment income, i.e. trading income, are two separate allowances. So you are allowed to have one of those for each of those sources of income. But when it comes to your trading income, when it comes to your self-employment, even if you have more than one business, you're only allowed to apply that to your total from self-employment. So you have to then think when you add the businesses together, if you've got more than one, that you can only apply the trading allowance against the whole income, and then no expenses if you're managing that way. But if you simply have one business, then just to recap, if your trading income is below the trading allowance, which is £1,000 currently, then there's no requirement to declare that, but you should keep records so that you can demonstrate why you haven't declared that income and that you've relied on the trading allowance. If your trading income is above, then you can, if you wish, claim the trading allowance against that. Against that income instead of the actual working out all your individual expenses, if you wish. So you don't have to do that. It's something that's available if it's more convenient or more tax efficient for you to do so. So hopefully that's just a really quick overview on trading allowances, but hopefully that does answer a lot of the questions that we have been seeing on trading allowances. And thank you very much for watching. As I mentioned earlier, if you haven't already, please do subscribe to the channel. And if you find the information helpful, please do take a second to like the video. That helps us to understand which content is the most useful for people. Thank you. Goodbye.